Hello, everyone. My name is Allie Johnson, and I will be moderating today's webinar. I'll begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Blake Quesenberry, a Capital Pathways business advisor and CPA. He'll introduce himself and take us through a presentation on organizing your business finances. As we go along, please feel free to ask questions using the Q&A function. We'll respond to them at the end of our session. And for any questions that we don't get to today, we're happy to address them through no-cost one-on-one services or connect you with resources that can help. I'll share a recording of this webinar and slides as part of a follow-up email. So, what is the Capital Pathways program? It is a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Businesses and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We'll start with a program overview, then go through program eligibility, and finish up with an outline of our services. Capital Pathways is a no-cost, specialized SBDC program that helps small businesses build the systems and habits needed to become capital ready. Being capital ready matters because businesses that are less prepared can often self-select out or fail their loan applications. And these early failures correlate to a lack of adequate capital. Additionally, higher cost alternatives often don't build long-term capacity. And ultimately, only half of the loan amounts that are requested actually reach small businesses. So to put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, only 20 to 30% of those who apply actually get their loan approved. To help address this challenge, Capital Pathways creates a path to financial and legal readiness. Our program offers an immersive, hands-on group experience paired with one-on-one support. Who's eligible? Very small businesses and nonprofits at any stage who face challenges accessing traditional financing. And the services we provide include guided self-assessment, legal structure validation, financial skills and tools, loan application readiness, and credit building advising. As I said, we start with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources either through our Capital Pathways program or other resources that can help. Under our legal structure validation, our in-house advisors can help you through basic legal questions. We also partner with a law firm who can help with more complex topics related to business registration, trademarks, and contracts and agreement reviews. We also offer financial webinars on topics like financial basic topics like this one, as well as financial statement preparation and QuickBooks training. Our one-on-one tailored support covers business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, as well as loan readiness and lender preparation. These loan application readiness services include both webinars and one-on-one individualized support. Our webinars cover topics such as what lenders look for in a loan application, interactive mock loan interviews, SBA loan options, and sample application analyses. In addition to this, we partner with a lender who can provide one-on-one support to those looking for capital. Finally, our credit building advisor will help you interpret and review your business and professional credit reports as part of building an individualized credit improvement plan to strengthen your credit and help you qualify for better financing options and terms. So all that said, if you're interested in getting started, you can reach out to me through our website at virginiasbdc.org/programs/capital-pathways, or you can contact me directly at capitalpathways@virginiasbdc.org, or through my personal email, ajohn216@gmu.edu. I will share my email and the website link in the chat so that you all have them. Now, over to introductions. As I said before, my name is Allie Johnson, and I'm today's moderator. I serve as the Program and Intake Coordinator for the Capital Pathways program and have a professional background in economic development, small business support, and access to finance projects, both domestically and internationally. Our session today will consist of a 60-minute presentation. And again, please feel free to ask any questions throughout using the Q&A function. We'll respond to them at the end of our session. And as I said, for those questions we didn't respond to today, we are happy to address them through our no-cost one-on-one services or connect you with resources that can help. Again, I'll share a recording of this webinar and any slides and links in a follow-up email. I'd like to now pass things over to my colleague Blake to introduce himself, tell us a bit about himself, his background, and start the presentation.
All righty. Thank you, Allie. Now let's make sure we get our screen shared properly here. Okay. Yeah, thanks, Allie, and thank you everybody for being here today to talk about the uh, the money side of business. It kind of feels like once you've garnered the client base, it starts to feel like there's a whole new product line introduced and a whole new side of the business to manage, which is money and cash flow and things like that. So we're going to talk about that a little while today. Alrighty, so like she said, my name is Blake. I'm a CPA, run a little CPA firm based out of Bristol here in Southwest Virginia. And I work with SBDC and Capital Pathways, mostly within the Southwest region here. And most of my time in the day to day is spent with business owners like you. That is my main client base. It feels like I'm a little disconnected from them right now because it's tax season, but most of my time and efforts are spent with business owners and helping them understand their cash flow, helping them ramp up their information systems and things like that. So a few things we're going to talk about today, um, how to properly separate business and personal finances. And once that foundation is built, how you can start information systems tracking like bookkeeping, revenue expense tracking, things like that. And then how do we extract information from those systems, right? So, income statement, balance sheet, income statement being more of a snapshot of your operations, while the balance sheet might be the story of how you got there. Okay. And then how can we set goals based around that? How can we scale, expand if that's what you want to do based around those information systems? So we've got Sarah here. Poor Sarah's going to be kind of our scapegoat today. She's going to be our model of what we don't want to be as business owners, and has nothing to do with Sarah's ability to grow the client base, has nothing to do with her ability to deliver her products and services, but has everything to do with just not quite staying on top of the financial side of her business. So she's got all these customers, great reputation, but it's a mess when she goes to visit her CPA or her tax preparer at the end of the year. Okay. Shoebox full of mixed receipts. Gonna have to pay her CPA a lot to go through those shoe boxes, right? And can't prove income when she needs a loan. She's afraid to hire because she doesn't understand her cash flow. She doesn't understand how much room she has in her profit margins, right? And of course, as a result of this, she's stressed. Okay. And the core problem here is reactivity as opposed to proactivity. So she feels like there's a million holes in the boat and she's plugging them, but then another two or three pop up, right? And like we said, she's scrambling at tax time, missing opportunities, and she's just not enjoying herself, maybe as much as she was when she first had the vision for her business. Okay. So we want to flip the script on that. We want proactivity as opposed to reactivity. So we want to prevent those problems. We want to put the systems and processes in place financially to prevent those holes and those fires from popping up. And we want to have the information and the data that we need to seize opportunities to scale. And it doesn't even have to be scaling, it could just be understanding when you can better curate your client base and your service offerings and things like that, and your pricing. And you just want to overall be more confident in your decisions. So this is kind of the order of operations here. Number one, it is imperative that you start off in your business with separate bank accounts between personal and business, right? A million reasons for that, many of which we'll get into today. And once those are separated, it makes the possibility of accurate bookkeeping very achievable, even if you're just doing it yourself, because you can bet that anything coming into that business account or going out of it is related to the business, right? And then it's just as simple as, hey, what do I do with this? How do I categorize this? And what tax effect does this have? All of that becomes much more clear when your business and personal finances are separated. Okay. And based on that bookkeeping, we're going to implement systems to track different categories of revenue, different categories of expenses, ways that you can have better receipt retention in the case of an audit. And then number four here, once we have all of that information in place, how can we extract it? What are the reports that we can leverage to drive decision making? And then once all of that is in place, what goals do we have? What is the vision for your business? Do you want to revisit your original vision and set goals based on this information that you've gathered? Just a few consequences here of not keeping things separated, of not developing these information systems. If you go and try to secure a loan and you're asked about the performance of your business and you can't answer that question, that's going to be a red flag right off the bat. Okay. Um, so if you can't prove your income, if you can't prove to a lender that you can service that debt on a regular basis, then they're not going to give you that loan. Okay. Restaurant owner, huge boxes of receipts from restaurant owners. Okay. Tons of receipts flying around in restaurants. Gonna cost you a lot if you just show up to your tax preparer's office with a million receipts. Okay. It's just not efficient for anybody. A consultant missed $5,000 in deductions, overstated their taxable income by $5,000 because they couldn't tell what their business expenses were just by looking at their bank statement. They didn't feel confident trying to claim those deductions. And it feels dangerous to claim them if you're not sure about them, right? Because if an audit comes around, there's a good chance they're going to get disallowed. If you can't tell if they're business deductions, the IRS certainly isn't going to put in the time to try to decide if those are legitimate deductions. Contractor made incorrect pricing decisions, didn't do any market research, didn't understand the cost of delivering the product, so they didn't price correctly. They didn't understand how much margin they had. So, because of that, they lost thousands of dollars in profit throughout the year. HVAC business owner, this is probably the scariest one to me. HVAC business owner had to reduce the sale price of a company by $250,000 because the buyer couldn't get financing because the lender didn't like how the business owner's financials looked. So imagine putting your life's work into a company and then you've got to reduce the sell price before you ride off into the sunset by $250,000. We don't want that to happen. Proactive management. Some of the benefits of this: organized finances, not much resistance on getting those expansion loans. Okay, simple as that. If you can prove that you can pay it, lenders will lend it. Contractor costed out um, every component to delivering their service, deemed that they need to raise their prices. Customers are generally going to be, I hate to say it, they're going to be okay with it because they understand that materials and things like that are going up, or they're they might not be terribly excited about it, but generally people understand the market. Um, if it costs a certain amount to deliver a product, you shouldn't be afraid to raise your prices. That's most of the time going to result in higher revenue. Okay. HR consultant built up their cash reserves, understood the flow of cash throughout different seasons, and was able to weather the slow seasons confidently. They had enough built up there. Photographer paid estimated quarterly taxes, wasn't scared to systematize their tax payment. A lot of folks are scared of that, but you shouldn't be. Okay, if you can systematize your tax payments, your tax bill 90% of the time is going to look a lot better because you're able to make decisions based around it. Okay. So let's talk about how do we actually enact separating personal and business finances. Again, this is the foundation of information systems for a small business. Reactive means I will deal with this later. They'll split up bank accounts later. Well, the problem with that is you sign up for 100 subscriptions related to your business, maybe some software that you need, and you have them tied to a specific bank account. So it becomes more and more daunting over time to go back and separate those accounts, right? So we want to do this up front. Even if there's not a lot of even if there's not a lot of traffic in your business account, go ahead and set it up. Um, don't be reactive with it because it gets more and more difficult throughout the course of your business if you don't do it from day one. Proactivity in regards to this. When you go to get one of those expansion loans that we discussed, the lender is going to see that immediately, right? If your business is compartmentalized, if it's an entity that's created on its own, then that's going to bode well for you when you're trying to get a loan, or for that matter, when you're trying to get a client, right? Legal protection. You don't want to pierce the corporate veil. You don't want to commingle yourself and your personal finances with your business. You want to keep everything at arm's length. You don't want any litigation related to your business to pass through to you. Okay. And commingling personal and business finances is the quickest way to get rid of any liability protection. Okay. And of course, we're going to have better information surrounding how do we grow and should we grow, right? If you have clean separation. And it's non-negotiable. Um, Even for folks that are sole proprietors, even for folks that don't have an LLC, I think that there is no argument for keeping it all together. Okay. Um, as we discussed, legal protection, Virginia specifically is a very hands-on state, very good to work with from a tax perspective. But they're not going to miss anything. Okay. So your conversations with your state when you receive a letter from the state are going to go much cleaner if you can show them the history of your business, right? Um, Hopefully they don't ever have to send you a letter, but if they do, it's gonna be much better for you if you have it compartmentalized. Okay. Professional credibility, like I said, banks are going to be able to tell pretty quickly whether you're serious about your business. Clients as well. And decision clarity. So if your business and your personal assets are commingled, you're not going to have clear information on either one, right? So when you're making personal financial decisions, you're not going to have clarity there. When you're making business financial decisions, you're not going to have clarity there. Okay. So how do you implement this? Open the account first. So if you have an LLC, call the bank and they will walk you through the process. They will ask for your EIN number. If you do have an LLC and you want to start a bank account, you will need an EIN number in most cases. So talk to the bank, rip off the band-aid, go ahead and open the account. Even if you've already started your business and your accounts are already commingled, today's the day. Okay? Call your bank, open up that account, and get rolling there. Step two, we want to be a little bit leery of step two. Now, if you know that you want to expand and that you might pursue funding, it could bode well for you to go ahead and open up a card. But if only if you're sure that the business can handle that, if you're sure that cash flow can handle that, and if you can make sure that those are paid off consistently so you don't get hit with those crazy interest rates, right? But a credit card under the name of the business can help build credit and start to ramp you up toward growth. Okay. Set up business payment processing. This is huge in a lot of ways, even for service-based businesses like myself that don't really have to worry about sales tax. Okay. Um, Business payment processing will give you a lot of reporting capability. I really like Square. That's what I use, but there are tons industry specific business payment acceptance softwares. And this is also going to improve cash flow by giving customers more ways to get you money. It's kind of a no-brainer, right? Getting customers to pay is almost a job in itself. So make sure that you have those systems in place. Step four, create a system for paying yourself. Um, Even if you are a sole proprietor and you just pull the money out when you need it, I would recommend creating a routine for that and almost treating it like it's a salary where you take a certain amount of money out per week or per month or what have you. This, again, will give you better clarity over both your business and personal finances if you have consistent movement there, right? Instead of just waiting and saying, hey, I got to pull this from the business because I need it personally, or vice versa, right? And of course, the pain with getting these separated, if you're not already separated, is just updating those payments and subscriptions. Because if you consistently have payments and subscriptions coming out of the wrong account, that's going to mess with any sort of eyes that happen to get on your business, whether it's a lender, whether it's a creditor or the IRS. If you have old residual subscriptions that are coming out of the wrong account, it could really mess things up. Okay, from a liability perspective, from a tax liability perspective as well. All righty. And you're going to hear these words over and over again, right? Um, don't use the personal account just this once. If you do, if you make a mistake there or anything like that, just make sure that you reimburse yourself from the business and label that as an expense coming out of your business bank account. Don't pay personal bills. Don't take random owner draw amounts unless you have properly evaluated cash flow, um, both for the prior period and future periods, right? And make sure there's documentation behind every draw. Don't forget to update recurring payments and track your business reimbursements. Okay. So you've got everything separated, all right? And again, that is foundational to information systems for your business. What do we do with that? Okay. Bookkeeping. So we want to establish some sort of software. Maybe it's just Excel to start out to make sure that we are getting your books rolling. Okay. So levels here to it. Let's say that if I were to give you a score um, from 1 to 5, all right, you would receive a 1 if you were just running your business based on your bank balance. Okay. If you are making a decision for your business about hiring an employee or something like that, and you're just eyeballing your bank balance to see if you can do that, probably not going to cut it long term, especially if you want to grow. Okay. Level two, loose tracking of revenue and or expenses. So you're developing a profit and loss for yourself. Okay. You got to do that during tax time anyway, right? Or somebody's got to do it for you. So you've improved. You're not just running it off of the bank balance and saying, hey, if I've got $5,000 in the bank, that's my net income for the year. Uh, no, you're actually figuring out the tax nature of your revenue and your expenses. So that would be level two. Level three, detailed spreadsheets. Maybe you have a spreadsheet that automatically generates a P&L for you as you put your bank data in there. Okay. That's where a lot of businesses start. That's a lot of how I start a lot of folks off if they don't have any information systems in place. And again, that's recommended when there's a low number of transactions in a simple business model. Level four, you're actually paying for accounting software like QuickBooks. All right. And level five, I would say level four is when you're paying for the software. Level five is when you're actually using it, right? Because there is some gray area there. A lot of folks have it, and it gets behind. You're not much better off paying for it if you let it get behind than you were just to, again, take the shoebox to the CPA, right? So we want to have consistent improvement there, especially as your business grows. Categories to track. Always track your dates, of course, because this is gonna be pivotal to your cash flow analysis. Okay, that's gonna tell you what your best seasons are, what your best months are. Track customer and vendor because you're gonna have to issue 1099s most likely. And you also want to know how much you've paid specific people. So when you reevaluate your sourcing and things like that, you can decide whether you've spent too much on a specific vendor. Okay. Amount goes without saying. All right. Income and expense categories. So if you have multiple product lines, you may want to separate out those revenue categories so you can see what your best lines are. And same with expenses. You want to have constant analysis of your expenses to see where the leaks are within your business. Common expense categories. Cost of goods sold. That's becoming less of a thing for small businesses because now you're not required to track inventory. You can just book um, purchases for resale directly to supplies. If you make, I think it's less than $25 million a year, you can now just drop that all under supplies. So supplies has become a great blanket account for items for resale. Now, you may want to separate out your purchases for resale to track that, to kind of separate it from office supplies or something like that. But generally, supplies has become a really good blanket account to park things in. Advertising, marketing, travel expenses, personal services, like getting your taxes done, insurance, utilities. Owner draws are not an expense, okay? That there's an asterisk there. These are not going to show up as an expense on your P&L, right? If you were on W-2 or if you had employees on W-2, then it would. But owner draws are not an expense to your business, and they don't reduce the taxable income of your business. Okay, so we don't want to track those as an expense. That's an equity item, but you do want to track it. Okay, you do want to track it and know how much money you have pulled. All right. Revenue tracker. Again, I think that, there's no reason to get too complex with this, especially if you're a service-based business and especially if you're starting off. Um, I would just track these as you want to with if you have different product lines that you want to know how much you've made from a specific product. Sure, introduce different revenue categories, but we also don't want to muck it up too much, right? We want to keep it somewhat simple. Okay. Expenses, I would maybe recommend itemizing these a little bit more. Uh, not too much. I've seen folks that literally have an account, an expense account for each individual subscription. And it has been helpful in the past, just so we know how much people are spending on Spotify for the office and things like that. But um, ultimately, we still want to keep this whittled down to a handful of accounts. And then beyond that, if you see opportunities to kind of dig into the analytics of your expenses more, then yeah, create more expense accounts for better tracking for your business once you get your hands around it. Okay. And again, owner draws, not an expense. That is an equity item, does not affect your P&L. All right. Reconciliations. So bank reconciliations are where I see a lot of business owners putting on the brakes. Okay. A lot of folks will get to the point that their bank account is interfaced with their accounting software, and they will categorize their transactions, and they may even do some research on how to treat certain transactions. And they might know how to set up accounts, but they don't reconcile the bank. So you start to see that bank balance and that QuickBook balance start to get further and further away from each other, right? And you're like, what's going on? Well, that's just a lack of monthly controls and reconciling your bank account. Okay. If you do it from the beginning, it's going to be about a 30-minute a month process. If you don't, if you're constantly catching up, it's going to take a lot longer and it becomes a lot more difficult the further you get away from when those transactions were made. And you're asking, what in the world is this? I don't remember. I don't have any receipts. What's going on? So we want to do this from the get-go. It becomes a breeze if you have the right systems and processes in place. And you can have both your bank and credit card statements interfaced with your accounting software now. All right. So there's really no excuse. And a lot of banks will even automatically import bank statements to accounting software, right? Now it's not that simple if you track it on Excel. Okay. And that's something that would be good for you and I to discuss if you ever want to work with us in Capital Pathways. That would be a great thing for us to discuss. How can we make bank reconciliations work in Excel? Okay, if you aren't quite ready to invest in the accounting software. All right. So again, this is all about proactivity. Fix the problems up front. Don't let them carry forward into further months. Okay. Um, Common differences, common reasons that your bank you don't quite match up with your bank statements. Bank fees like to kind of hide in different spots on the bank statement. Unclear deposits, you may think that if you write a check at the end of the month, that it should show up in that month. Well, you're going to have to wait till it clears, right? If you're a small business, you're probably operating on the cash basis and you don't want to record that unless there's a specific reason to, unless you want to get that deduction in the current year. Um, if it hasn't cleared yet, it's not going to show up on your bank statement, right? So that trips people up sometimes. Um, and missed matching transactions across accounts. That's an accounting software problem. Certain accounts, like if you move money from one business account to another business account, and you've got them both connected to QuickBooks, it may not register what's happening. So you want to make sure that it does, so that the accounting is reflected in both accounts. So the ultimate goal of that is clean data, reliable reports, confident decisions based on those reports. Some simple options to track all these things that we've discussed. And a lot of these kind of they vary based on industry. Okay. Obviously, one of the more popular tools, as I said before, is Square. Uh, as far as revenue tracking goes, your point of sale systems are going to give you probably a little bit better analysis of incoming money than something like QuickBooks would. QuickBooks does a great job, but these point of sale systems are really good. They'll also track your sales tax so that you can keep an eye on how much money that you have in the bank that is actually owed to the state because you took it from the customers, right? So we want to remember that. Um, but then again, we could go down the list forever of industry specific tools here to track revenue. All right. That's not to say that you can't do this with just QuickBooks or an accounting software, but again, if you're in a restaurant, you're probably going to want a point of sale system. Okay. Tracking expenses and receipt retention related to expenses is, I would say, maybe the most time-consuming aspect of properly running a business, okay? Because bank statements just really still don't hold up. Um, Credit card statements just really don't hold up to the IRS. So you want to make sure that you have access to receipts, okay? Um, whether it's an account, like if you have a wholesale account with Lowe's, for example, as long as you know that you can access those receipts, okay? Um, most if you work with like a mom and pop shop or a contractor that's local, you want to be pretty diligent about getting invoices and things like that and just having documentation because again, with Lowe's, if you have a wholesale account, you can get in and get those receipts. But with these smaller businesses, you can't. If you call them 2 years down the road and say, "Hey, I need documentation for this job," chances are they're not going to have it. So you want to be proactive with that and make sure that you get that documentation from them. All right. So once we have the tracking in place, how do reports work? How does reporting work? This is what's going to be the kind of the liaison between you and lenders. So what kind of reports can we use here? Income statement. Again, this is a snapshot of your operations. Um, so this is going to be probably the first thing that a bank or a lender would look at. Say, what are the margins like? How much money are they bringing in? How much is going out? Okay. And even better, if you can kind of split this out by month, QuickBooks will allow you to run a P&L by month. Um, that's a good simple cash flow statement. Okay. That's a good projection. That's something to look at for next year and determine the seasonality of your business. And that's something that lenders will look at also. So is your revenue growing, flat, or declining? Which expenses are ramping up the quickest? What's your margin? Can you afford to hire somebody so you don't have to do every single thing within your business, right? You got to understand your flow and your margins for that. And again, if you can break it out monthly, um, that can be a pretty powerful tool. And just as a side note, as I mentioned before, this is if you're a sole proprietor, if you fill out a Schedule C for your taxes, that's essentially what you're going to have. That's all you need for your taxes, right? It's a P&L. A sole proprietor is not required to keep a balance sheet unless they're in specific industries. Um, in a similar vein, if the P&L looks good, why are we still running out of cash? All right. As we discussed before, getting customers to pay, it can be difficult, right? And it's not always the fault of the customer. Do you have the processes in place to receive payments? So if you're doing a lot of work up front and you're not converting that to income for months at a time, that can be a problem for your business. That might be why it feels like you're always behind. Okay. Again, those owner draws, if you're just eyeballing the bank account and you're pulling out, you say, "Hey, I've got $10,000 in here. I'm going to take five of it out." Well, maybe you didn't think about the other five that you're going to have to pay out in taxes for your net income for the year, right? So, if you're just looking at the bank account, pulling out owner draws when it looks good, might be setting yourself up for failure. Now, that's not always the case, but that is a big driver of cash flow challenges for small business owners. And of course, not keeping up with credit card balances and high expenses, not understanding your margins, not understanding how much rent you can afford. That's why businesses that are booked solid can still run out of money, right? So we want to understand payment timing. We want to have a systematized payment plan for us from our business. We don't want to rely too much on credit cards and debt, and we want to map out fixed expenses and analyze those accordingly. Just a few things here that can help us. And I know that if you're a business owner, you're strapped for time, right? It's just the reality. So, what are some systems we can put in place that will actually free up your time down the road instead of, spending a few days or maybe even a couple of weeks at the end of the year trying to get all this stuff lined up, right? So make sure your revenue and expenses are tracked weekly or at least categorized weekly. You don't have to analyze them weekly. You don't have to reconcile weekly, but just look at it weekly. Make sure your receipts are up to date weekly because they are going to get lost if you don't, right? Update mileage logs. And again, develop the process. Pick a day of the week that you're going to sit down for 2 hours and do this. Monthly, reconcile those bank statements. Make sure that nothing was missed. And the bank reconciliation will often tell you that. And that can often reveal, hey, I didn't get a receipt for this expense, so I need to go hunt that down before it's too late, before the other super busy business owner that I used for this job, before they forget about it. Let me go get that receipt. Let me go get documentation for them, right? And go ahead and run those P&Ls and things like that monthly and just see how look at the health of your business, right? Why would you not want to do that? Okay. So what do we do with all this? So you've all had a vision for your business, right? And there was a reason that you thought it was going to work. Sometimes once the money's there and the clients are there, you start to question that original vision, right? So, but once all that stuff's in place, once the processes are in place, we can kind of go back to that, right? We can kind of go back to that original vision and tweak it and say, well, maybe this wasn't realistic, but this has worked. And so how do we want to scale this? Do we want to scale this? Okay. Again, reactive versus proactive. Reactive means I hope this year is better. I hear that a lot. And it kind of it surprises me when I hear someone say, hey, it just is what it is. What I hope this or I hope that. It's like, well, there's not a lot of action involved with that, right? So we want to be proactive and set goals, right? So that we can actually have actionable items related to those goals, right? And we want to do that based on evidence and the information systems that we've been talking about so far. Here's a little kind of example framework of some goals that you might want to implement. Set revenue targets. And that might sound oversimplified, right? Of course, everybody wants to make more money, but when you talk about it and you say, "Hey, well, this is how much we actually need to operate," then you can say, "Well, here are the actions we need to take. Maybe we need to get out in the community and build relationships to build our client base," right? You can start to introduce actionable items that can actually result in driven revenue. Expense management. That's a pretty easy one. I mean, it's pretty cut and dry. Is if you spend time controlling your costs instead of just swiping the card, right? Um, maybe get that extra quote, right? If you need a job done, get the extra quote. Make sure that your expenses are calculated. Okay. Profit improvement. That's kind of a combination of both of those, right? You want to you want to expand revenue and squeeze expenses. It's really it's that simple. It's not that easy, but it is that simple. So what are the actions we need to take to improve margins, and what can we do with the margins that we have, right? Want to build an emergency fund. You certainly don't want to be overdrafting, right? Um, a lot of businesses do. And it's a compounding effect. It's you don't have the money in your account. Okay, well, so the bank is going to see that you don't have the money and then they're going to charge you money, right, to overdraft. So want to make sure that that emergency fund is in place and we're not towing that line of, hey, can we make payroll this week, right? And growth, what does growth look like to you? If your business is going well, if you've done these prior steps, um, how do you scale it? It's another challenge in itself to say, hey, well, how do I maybe replace myself with two more people that can grow the business, that can continue this, right? Cash flow is just a massive issue for companies. So I want to harp on this one more time. Reactive cash flow is expensive. It may sound that sounds odd, but if your idea is, hey, I'm going to go get funding for the survivability of my business, when I'm there, if I need it, I'll go get it. That's the most expensive money that you can get, right? The banks are going to see that. You're at the mercy of whatever the rates are at the time. That's very expensive money. When you need it most, it's the most expensive. So we want to avoid that. We want to be forecasted, and again, we want to have goals in place that we keep a hawk's eye on cash flow because it's as you can imagine, it sounds simple. Cash flow is the biggest killer of small businesses, right? So we want to stay ahead of it. Action plan. Of course, open the business bank account. Do it today. If you haven't already, do it today, please. Information systems, tracking systems. Keep your receipts. Organize your receipts. Make sure that you have access to the money that's going out. If you are booking this as a deduction for tax purposes, you need to be able to back it up. Okay. Set aside time to do this stuff on a weekly basis for certain things, monthly basis for certain things. Meet with an advisor or a mentor, maybe somebody who has had a successful exit from a business. If they're still in the business, they may not have time to talk to you, but maybe somebody that's done it before, right? And a little bit just weekly, monthly, and quarterly categorization here. The more tick-tacky stuff, you probably want to do that weekly. Update your revenue and expenses, track down those receipts, mileage trackers, pick a day and time, stick to it. Monthly, reconcile your bank statements. That's going to tell you whether there's anything that has been missed. If your bank account doesn't match, if it doesn't reconcile, then there's something wrong. It's either you've just made a mistake or there's something missing or there's a process in place that isn't functioning properly. Want to make sure that that happens. Quarterly, maybe do a little bit more of a deep dive into those financials. Okay. Maybe expand, zoom out a little bit. Look at the quarter, look at those 3 months and say, hey, well, how did we do versus the same quarter last year? Okay. All righty. Let's go to questions.
Alrighty, so it looks like we only have a few in the queue. So please feel free to drop those in. And I'm actually seeing a lot more come in now. So we'll get started.
Awesome.
All right, first one. Is it necessary to set up a business payment processing if you haven't fully launched your business yet?
Um, I think that would depend on the nature of the business. If it's like a service-based business that you don't have to worry about sales tax, then you can go a little while until you start to see until you have some clients or you're selling some product or something like that. If you're selling product and you're liable for sales tax, then I would go ahead and do it because it's better for tracking sales tax manually is not fun. So you want to have a payment system in place. So, short answer, if you're selling products, yes, I would recommend doing that before your business is launched.
Thank you. And just a reminder to anybody or to everybody, please use the Q&A function to share your questions. All right, next question. If having one and maybe a few part-time employees, what source or service do you recommend to handle this and ensure compliance requirements?
So part-time employees. Would you care to read that to me one more time, Allie? I'm
Yeah,
sorry.
if having one, I'm guessing full-time, and maybe some part-time employees, what source or service do you recommend to handle this and ensure compliance requirements? Sounds
Okay.
like they may be asking about payroll, taxes, and all that sort of thing.
Right. So for somebody who is, if you're relatively new, I think that QuickBooks is a good option because you can actually get a hold of them. Okay. There are some issues with QuickBooks and some might find it a little daunting, but generally if you get stuck, you can reach out directly to them and they'll help you. So QuickBooks is really good, or you could call somebody like Paychex or um, I'm blanking on the name of the other one in my head, but Paychex will actually have they can actually do it for you. If you want to do it yourself, I would do QuickBooks. Otherwise, I would do something like Paychex or ADP, which is a little bit more of a guided um, payroll process.
Thank you. Next question. Are you able to tab any vehicle expenses such as gas and monthly car washes for travel?
So if they're related to the business, yeah, but it wouldn't necessarily be travel. Um, you actually You probably, yeah, you wouldn't want to do that in travel. If it's related to the business, that's just a vehicle expense. Now, you can't do both mileage and fuel. Okay? You got to do one or the other. So you can do mileage, which is kind of a simplified deduction, just based on by the mile, or you go to the other bucket, which is fuel and repairs, oil changes, things like that, and car washes like that. So it's one or the other. It's either mileage or actual, which is fuel, repairs, car washes, things like that.
Thank you. All right. Comment from one of our attendees that wellness systems are so pricey, and I completely agree they are. Next question is, what are examples of apps that auto-categorize and integrate with accounting softwares or with accounting for receipt tracking?
So the QuickBooks interfaces with just about anything that's like in the mainstream, QuickBooks is going to integrate with. And QuickBooks actually they actually suggest categories for your expenses, maybe based on what's in the description, in the bank description. Um, and as you categorize things, it will actually kind of catch on to that. But most modern accounting softwares like QuickBooks, Xero, and Wave have some sort of categorization suggestion. I don't know of any third-party apps that actually handle that. Um, I hope I understood your question correctly.
Sounds like you did. Someone asked if I'll be sending out the slides after the presentation. Yes, I will get them sent out within a week of today, along with any handouts or things that Blake would like to include. Same question about slides. What industries require a balance sheet even for sole proprietorships?
So if you are if you have a contractor's license, I know in Tennessee, to have a contractor's license, you have to submit a balance sheet. And I think that's just for, um, it helps them determine what, so contractors, and this is kind of a little bit outside of my wheelhouse, but you have a limit on how much you can, like the value of a house that you can build, right? So the state will actually put a limit based on your finances, how much of a value you can build a house for, right? So based on your personal finances and your balance sheet, which is loans, assets, cash, and things like that, they'll make that determination of of how robust your building can be. Okay, so that's just one example. I'm sure there are others.
Thank you. Next question is the asker is a year into their solo consulting business and realizing they made all of the mistakes you warn against. How hard is it to dig out? How hard is it to get a business credit card in a new business without records?
If you're getting the if you're getting the credit card to get you out of cash flow trouble, then I would not. If you're just wanting to clean things up, again, the first step is just making sure that you have separate bank accounts. Okay. Um, once that's done and once those processes are in place, maybe think about the credit card. But if you're just hoping that that credit card is going to solve your cash flow issues, I would not recommend that. But starting with getting everything separated, um, really honing in on your cash flow, really just sitting there and rebuild your budget for your business over and over and over. If it has to be every night, rebuild the budget so that you understand your cash flow better than you ever imagined, right? And then you can start making some decisions about, hey, is this something that can continue? Is this something that we can fix, right? But until you've done that, until you understand your cash flow, you're not going to be able to make those decisions, right?
Alrighty, next question. I'm in the startup phase of a nano brewery. How difficult is it to obtain an SBA loan for startups?
Um, that's gonna, Allie, I don't know if you have anything to add to that one.
What I would encourage is for that person to join our next SBA loan event, which is actually this Thursday. So I will drop that link in the chat.
Right.
And
Yeah, that's a
our
better question for a lender or somebody in that program.
yeah, our wonderful presenter Ford should be able to better answer that question. If a company has been in business for a few years, mixed finances, lost receipts, and no real accounting system, took a year off to reorganize the systems, what would be a good way to restructure for a catering company that serves mocktails?
Um, I think just starting today and doing it right, slowing down, and um, it's been done, so you know that there's a market for it. But so the market's there. Maybe take a step back from that market and say, hey, how do we build this foundation? Again, make sure everything's separated. Develop a process, maybe invest in some software like QuickBooks. You can get it on your phone. You can take a picture of a receipt, and it doesn't always work, but most of the time it will actually suggest based on what it sees on that receipt which transaction it should go to, right? And then you can attach it to that transaction. So I would invest in some software that makes that receipt retention a little bit less daunting. And I wouldn't worry about what you've done in the past. Obviously, we hope and pray that you don't get audited for that period. But and if there is any big transactions that you want to try to chase down from those periods, that would be great. But the easiest thing that you can do is start doing it correctly today and maybe make some investments in software that make it a little bit less daunting for you.
All right. Next question is someone looking for a tax expert? Um, if you don't mind, Blake, I'd love to plug our advisors. A lot of them like you, have experience with tax preparation and helping people get organized, but um, please feel free.
Um, I'm So they said looking for a tax expert.
Yes, they
Well,
asked
we
for a recommendation.
um I mean all I can say is we would be if there is a way that we can rope this into how your business works, um I think that's something we could help with through this program if you wanted to reach out. As far as actually preparing your taxes, um, can't do that. But if you could get the stuff organized, if we can help you get the stuff organized, finding that tax preparer is going to be a lot. They're going to be much more likely to work with you if you've got the processes in place, right? So that's going to be your path to finding the best tax person is making sure that you're bringing them the right stuff. Okay.
Next question. What is your opinion on using credit card banking along with credit cards such as Amex?
I've actually never used like a bank account or had a customer that used a bank account that was tied to a credit card company. Um, as long as it functions, as long as it's FDIC insured, then I have no problem with that. But when it comes to credit cards, I mean, you can never justify in any industry paying interest on a credit card. It's just outrageous. You're never gonna if that becomes a big part of your business, you're never gonna outpace it. It's eventually gonna get you. So credit cards can be good for building your credit, obviously, but it needs to be done extremely carefully, right? So just make sure you're not paying a dime of interest on that.
Alrighty, I do see that we are at 1:03. We do have some time for those who'd like to stay on, and we can answer some more questions. But for those who are not able to stay on with us and have to jump to other things, thank you for joining us.
Thank you all.
All right, so moving on to the next question. What is Can you apply to not be charged for sales tax?
Certain industries can. Um, I've I apologize. That's something that I'm not terribly well versed in. Some of my clients work with folks who aren't, I think, farmers. Farmers don't have to pay sales tax. And um, if you work with farmers and folks like that a lot, then it's something you got to keep an eye on because you've got to have documentation that folks are exempt from sales tax. There are certain industries I know that you can. I'm not going to try to tackle that one because most of the folks I work with are working with me because they are liable for sales tax. So I apologize. I don't have a lot for that one.
Um, Next question is, what is the best POS system for this type of business? And I'm not seeing a specification, so if you wouldn't mind talking about kind of your top tier POS systems that you have seen.
Yeah, I really like Square. I think that's what I use. And I've tried a couple. I tried Clover, and I think Clover for maybe a more complex business um, may be better. It seems like it's got a little bit more robust reporting capability. But for me, I just wanted something that was really user friendly so that my staff could use it, right? So Square is very user friendly, comparable transaction rates. I haven't had any trouble with it so far, and their hardware is good too.
Excellent. Next question is, how does one track budget versus actuals, including obligations not yet paid and tied to cash flow and bank balances in Excel? This sounds like something our advisors can certainly help with. But Blake, if you wanted to touch on that quickly.
Yeah, something like if you don't have QuickBooks, though, that sounds like if you're doing that, you might need it. Uh, because again, a lot of businesses can operate on the cash basis. What you're referencing is what's called the accrual basis, which means we also want to rope in stuff that we haven't paid yet, right? Um, or obligations that we have. So if you're doing that, you probably could use a more robust accounting system than Excel, right? It's not that it can't be done. We've had to do that before, but it becomes a lot more difficult. The first goal would be go ahead and tie out the bank statement, and then you've just got to piece in those extra non-cash items or those items that haven't been realized yet. But the foundation of it is the bank statement.
Thank you. Next question is, should I use my personal money to secure a business loan for startup, or should I just use my own money to get started?
Um, I'm hesitant to recommend like funding for somebody who has zero clients, right? I think that making sure the market's there is going to be the first thing. So I wouldn't go out looking for funding until you know the market's there, and then you can say, "Hey, well, I've had 10 clients or 10 customers. What does it look like if I had 1,000?" Right? That's when funding can come into play is, hey, we know the market's there. We know what the margins look like for these 10. How do we scale that up? Right? So, um, using personal money, it's hard to make a recommendation on spending money in any capacity, right? Because I don't understand the business. But um, I didn't take out a loan for my business. I probably won't. But as far as whether that's your personal money that's used to launch that, it all depends on whether you're confident in it. If you're confident in the market, then yeah, maybe go secure the funding, right?
Thank you. Next question. Do you have any experience with Zoho accounting software? QuickBooks is double the price with more than half hour waiting time or hour and a half waiting times. Small businesses with minimal clientele needs should know about the software. So, any experience with Zoho?
No, I don't, and I'm that doesn't ring a bell for me. I'm always looking for new stuff, so I appreciate the tip. And again, I've had trouble finding an accounting software um, that I can actually get in touch with. And that's the only reason I'm with QuickBooks is for the customer service, right? It's not anything really to do with the software. So if there's another one that's comparable that I can get a hold of support, then I'll be sure to test it out. And if I can pass that through to some of my smaller clients, that'd be great.
Awesome. I receive payments via Cash App. Can I take this payment information to a CPA?
Um, yeah, I mean, you're any way that you receive now. I don't know whether Cash App would like for you to be receiving business payments through their app. I think they probably have a separate um, account type for businesses. But once you've made the money, the best thing to do, especially if it's electronic, because there's a massive paper trail, right? A CPA is not going to turn you away because of how you receive the money. They're just going to be working based on the money you received, right? And they'll just put that into their accounting software. So that's no problem.
Wonderful. Next person says, I have to be in business for 2 years before I'm guessing the bank or funder can access some grants available to small businesses. Oh, before the business owner can access grants available to small businesses. Can you shed light on the process of getting grants for small businesses? This is something that our advisors can certainly help with, but Blake, if you wanted to touch on.
Yeah, that's probably one that we would want to have a better, more one-on-one conversation about. But I can give you the items in this PowerPoint. Just making sure that everything is as buttoned up as possible is going to, when you do become eligible for those grants, it's gonna put you in a good spot, right? So I would just say until right up until that point that you're eligible for those. make sure that you're buttoned up, make sure that your finances are in good shape and everything is separated and things like that.
Alrighty. So another question saying, thank you, Blake, for sharing this info with everyone. I definitely echo that. And asking if you, Blake, assist with startup small businesses with CPA services tax filing. And I think you already answered that, but if you wanted to respond to it again, just for people's awareness.
Yeah, so I do. Anybody who would qualify for the SBDC and the Capital Pathways programs, I would go through that route because I mean, if they send you to me, we can work together for free, right? Um, if you're outside of that, I'd be happy to talk to you, or if maybe you're too large to qualify for the SBDC program, then you can reach out to me in a business capacity. But for startups and things like that, I would highly recommend going through the channels of this program so that we can work together and just have a chat. Now, I can't file your taxes, but I can kind of guide you through that process, if that answers your question.
Thank you. And just a reminder to folks, I did drop the website for Capital Pathways in the chat, as well as an email where you can reach me to help you get set up with an intake call if you're looking into advising. We have a couple more questions, and I think we're going to close the Q&A for now since we are already over time. So last few questions. What is the recommended time for actually keeping a ledger for a fresh startup? Does education investment or should education investment be tracked as well in QuickBooks for your business?
Yeah, anytime there's an expense related to the business, it's especially if it's coming out of that business account that you hopefully have that you're hopefully reconciling, then yeah, that should be put to an expense category. So anything related to business, if it becomes as a business owner, you can anything going out of that account most of the time is going to be a business related expense, right? But if it's not deductible, then hopefully at tax time, if you have somebody looking at it, you would catch that, right? So um, a lot of folks will use an account like Ask My Accountant. That way that when the accountant sees the P&L, they know to talk about it with the client, right? Um, but I would say as far as investing in software to start tracking your ledger, as soon as you can afford it, right? If you have faith in your business and it's growing, then go ahead, right? It's not, especially for startups, it's not a terribly cumbersome expense. But as soon as you can, I would try to implement some kind of software to track a ledger.
Thank you. And our final question for today. I did not realize COGS were no longer required for businesses selling under certain annual threshold, and instead supplies should be used. Do you have additional information or suggested references for that?
Well, you can still book cost of goods sold. That's still a valid expense. It's just that it's tied to inventory, right? So normal old school accounting process for a small business is if you're inventory based, you hold that inventory as an asset, and then when you sell it, you recognize the expense as cost of goods sold, right? So the inventory component of it is what is left. So you can still use cost of goods sold as that expense when you purchase those items for resale, or you can just use supplies, right? Um, so that may have been a little bit misleading. It's more of a fact that inventory has gone, so the way that we recognize cost of goods sold has changed. Um, so you don't have to hold on to that expense until it's sold, right? So you can still use cost of goods sold as the expense account. Um, but it's just changed to where now if you choose not to track it that way, you can just put those in a supplies account or something like that.
All right. So that was our last question, which means our time together it has come to a close. Um, as I've seen in several of the Q&A notes, I want to thank you, Blake, for your excellent information today and for answering all of these questions. We
Sure.
definitely look forward to the next session with you. Um,
Awesome.
as I said at the beginning of our session today, a recording and slides will be shared as part of a follow-up email that I'll be sending out within a week of today. And if you weren't able to get your questions answered today, please send us an appointment request through our website or send me an email, and we'll be sure to get you connected with resources that can support your business needs. Thank you to all of our participants who joined us today. And again, thank you to Blake.
Thank you, Allie, and thanks everybody. Hope you have a good one.